Howdy, y'all. Welcome to Liberty Call. Today is Wednesday, July 12th, 2023. Hope everybody's having a fantastical day out there in the interwebs. Glad you're here. It is a mostly sunny day here in Colorado. Little clouds here and there. It is hot. All that heat that's cooking Texas, we're getting the northern end of that. So it is. It's not terrible. It's I guess 84 degrees, but for here, that's warm. So. Anyways, like I said, hope everyone's having a great day. I'm glad you're here. If it's your first time watching Liberty Call, thank you. I'm glad you're here. I'm glad hopefully you can get some information from what I'm going to blabber about for the next, 10 minutes. And please, if you would, do me a favor right now. Press the likes, shares, subscribes, follows, all the buttons, either down here or up there or sideways. I don't know which. I'm not sure what you're watching me on. So anyways, all right, well, let's go ahead and also, if you could, give me some thumbs up. All right, let's go ahead and jump into the numbers for today. All right, Dow Jones was up 0.25%, 86 points, closed at 34,347. The S&P 500 was up 0.74%, closed at 4472. NASDAQ up 1.15%, closed at 13,918. The VIX was down 8.76%, it's currently at 1354. Canada was up 0.97. Brazil was flat for the day, up 0.09, and Mexico was down 0.34%. Over in Europe, Germany up 1.47%, UK up 1.83%, France up 1.57%. Boy, lots of good numbers there. Netherlands up 1.63%, Spain up 1.31%, Italy up 1 3/4%, Switzerland up 0.51%, and Portugal up 0.95%. Both Russian exchanges in the the green today. MOEX up 1.28%, the RTSI up 0.74%. And the overnight in Asia, not nearly as good as domestically and in Western Europe. The Nikkei in Japan was down 0.81%, Australia up 0.38%, New Zealand flat at down 0.01%. In China, the Shanghai was down 0.78%, Shenzhen Component down 0.99%, China A50 down 0.3%, DJ Shanghai down 0.8%, Hang Seng was up 1.08%, and the Taiwan weighted was up 0.37% for the day. All right. Well, that was the world markets. It seemed like, Europe and here in the Americas, things were pretty good, other than Mexico. But all right, well, let's go ahead and jump over to the market recap and see what it has to say. All right, there we are. Dow ends higher as big tech reigns supreme on easing inflation. The Dow Jones Industrial Average closed higher on Wednesday, giving up earlier gains as data showing a slower pace of inflation was pushed. Slower pace of inflation pushed Treasury yields lower and lifted tech stocks. The Consumer Price Index rose 0.2% in June, with 12-month inflation slowing to a 3% pace. Everyone is jumping up and down. Woo, 3%! Well, got a little more data after the second article to really show you how much inflation has really bitten into our checkbooks over the last 2 or 3 years. While the Federal Reserve is still expecting to resume rate hikes later this month, the possibility of further rate hikes beyond July is in doubt if upcoming economic data continues to indicate a slowdown in inflation. And again, I would say, Chairman Powell has been very blunt about this, that they are not going to stop their actions until they get inflation at or below 2%. 3% is not 2%. Last I checked, it's 50% higher. All right. Tech stocks rallied with Google, Microsoft, and Meta platforms leading the way as Treasury yields dropped sharply on expectations that the Fed's rate hikes are nearing an end. Where was I? Microsoft gained over 1% after a federal judge rejected the FTC's request to delay its $69 billion acquisition of Activision Blizzard, paving the way for the deal to close before July 18th. NVIDIA also closed higher, up over 3.5% on reports that the chipmaker is in talks to become an anchor investor in ARM as it prepares for an initial public offering in September. The upcoming earnings season was in focus with PepsiCo and Delta set to report their quarterly results. PepsiCo is expected to deliver strong results driven by momentum in its Frito-Lay division. Chips, they're good for you. Delta Airlines, which hit a fresh 52-week high before pairing gains, is anticipated to report positive earnings amid ongoing demand and lower fuel prices. Overall, the data showing slower inflation supported the market's optimism in the widely expected rate increase later this month could potentially be the final hike in the current cycle. Tech stocks benefited from the drop in treasury yields while the market participants awaited earnings reports and monitored upcoming economic data for further indications on the Fed's future monetary policy decisions. So, like I said, everyone's in hopes that the Fed's going to, print a lot. I'm just kind of reading between the lines, hoping that the Fed's going to stop raising rates, drop them down, below 3? Would that be better? Would that make America happy? And maybe print up some money? Because all the inflation you're experiencing right now is because of this exact thing. The Fed is the reason we're dealing with these problems. I swear. All right. Next up, U.S. economy shifts into disinflation mode. I wouldn't call it disinflation. You actually have to have prices going into the red before it's disinflation. But hey, what do I know? Consumer prices rise modestly. U.S. consumer prices rose modestly in June, with inflation registering its smallest annual increase in over 2 years, according to the Labor Department. The Consumer Price Index gained 0.2% last month, while the 12-month inflation rate slowed to 3%, the slowest since March of 2021. The report indicated a considerable slowdown in underlying inflation, sparking a rally in stocks and the bond market as investors interpreted the data as a signal that the Federal Reserve's tightening cycle may be nearing an end. Shelter costs, which include rents, accounted for the majority of the rise in CPI, while food prices ticked up only 0.1%. However, prices for used cars and trucks decreased, offsetting some of the gains. The year-on-year CPI increase of 3% is significantly lower than the 9.1% surge seen last June, largely due to the drop-off of last year's substantial price increases. Yeah, that's what's really happening. The moderation in inflation and price pressures was acknowledged in the Fed's Beige Book report, which highlighted some reluctance among businesses to raise prices due to heightened consumer price sensitivity. While the labor market remains tight and wage growth is strong, the slowing inflation has raised cautious optimism about the potential for the economy to avoid a recession. Financial markets have priced in a 25 basis point rate increase at the Federal Reserve's July policy meeting on the 25th and 6th. The central bank is expected to continue with its rate hikes, but the data indicating a slowdown in inflation has sparked speculation that the July hike could be the final move in the current cycle. Don't bet on it. The core CPI, which excludes the volatile food and energy categories because no one eats or drives a car, increased 0.2% in June, the smallest gain since August of 2021. This suggests a moderation in underlying price increases, with shelter costs and apparel contributing to the core CPI rise. However, prices for used cars and trucks dropped, and there were declines in the cost of airline tickets, communication services, and household furnishings. Overall, the improving inflation environment and the slowdown in core inflation indicate that the Fed may adopt a more cautious approach to future rate hikes. The markets are increasingly anticipating a watch and wait, and that's in quotes, stance from the Fed after the expected rate increase this month. The data also suggests that core inflation will continue to recede in the coming months, driven by a cooling labor market and declining rents. We shall see. All right, and here, let me bring this chart up showing come on, there we go. Showing this is going back to 2006, and these are the monthly CPI changes. And you can see where it really escalated here after where we went into the red during those months where had lockdown and the economy was ground to a halt. And you can see these really high numbers over and over again. So what I did, I went back to after the 3 months of negative inflation. So starting in July of 14, let me bring up my Excel sheet. The total on this, if you were to just total up each one of these months going back to July of 2020 through July of today, is a 17.2% increase across the board in CPI. So basically 17%, everything is 17% more expensive today than it was 3 summers ago. All right, let's get back to... So when these fools are saying, oh, it's getting cheaper, actually, it's not. Things are still, far more elevated than they were. And I mean, some things like fuel and, some things are well above that, 17% number. Other things are lower, but all in all, it's costing us, basically, 20% more for everything else we're doing in life. All right, last article I got here. The debt ceiling debate was pure theater. And this was written by Jason Morgan, comes to us through the Mises Wire. All right. The recent negotiations over the debt ceiling in the United States were characterized as a cheap political spectacle, according to the opinion piece. The author argues that the hyperbolic statements and partisan bickering surrounding the debt ceiling were merely theatrics with the outcome predetermined. They contend that the economy is rigged and that the debt ceiling was always going to be raised. The article highlights the inconsistencies and posturing of some politicians during negotiations. It mentions how certain politicians, like Representative Marjorie Taylor Greene, initially withheld support for House Speaker Kevin McCarthy over the debt ceiling, but later threw in their support behind him when the deal was reached. Mr. Morgan suggests that this is the political posturing was nothing more than hot air. Furthermore, he criticizes the notion of bipartisan compromise, claiming that both major political parties in the U.S. serve their own interests rather than those of the public. They argue that politicians from both sides pick the pockets of the people while pretending to represent their interest. The article also concludes with a call to action, urging readers to see through the theater of politics and demand accountability from politicians. Personally, I would just arrest them and hang them from trees, but that's what I would do. The author suggests that at this time, it is time to stop cheering for politicians to engage in deceptive practices and instead demand an end to currency counterfeiting and self-serving politics. The opinion piece reflects the skeptical perspective on the political progress and calls for a reevaluation of the public's relationship with politicians. It highlights the perceived lack of genuine political parties and argues for a more critical and demanding approach from the electorate. So, and this article is linked in the show notes. So if you'd like to read it in its entirety, feel free to do so. There's also, I read through the Mises articles every day. Some have to do with finance and, the economy. Others are just bitching and moaning about, status governments. So, all right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information's there. I hope you have a wonderful evening, and I'll talk to you next time. Adios.